Hello friends, welcome back to my channel Finance Eco India. Today we will deep dive into Angel One's Q1 Financial Year 26 financial results. Today we will be analyzing their performance with a particular focus on how these numbers stacked up against market expectations. But before that, please subscribe my channel and hit the bell icon. So friends, let's start with the headline story. How Angel One performed against analyst estimates. On the left, we see net profit after tax. Analysts estimated Rs 1,326 million, but the actual result came in lower at Rs 1,144.68 million, indicating a moderate miss. This was pressured by lower revenue and significant one-off marketing expense. On the right, the picture for total income is starker. Analysts projected a robust Rs 48,995 million, but Angel One reported Rs 11,430.93 million. This represents a closer shortfall against expectation, signaling fundamental headwinds for the company's top line. So friends, let's unpack the profit and loss story. The donuts chart on the left illustrates Angel One's revenue from operation breakdown. Fees and commission continues to be the primary driver, making up the largest portion of their operational revenue. However, a significant factor impacting profitability this quarter was highlighted by our key expense spotlight, the IPL sponsorship. A substantial 1,117 million was spent on this discretionary marketing campaign. To put that in perspective, this single expense was nearly equivalent to the entire net profit after tax for the quarter, highlighting its material impact on the bottom line. Now moving to the operational engine, we see a divergent client story. The bar chart on the left shows a sharp drop in gross client acquisition year on year, while Q1 Financial Year 25 saw 2.5 million new clients. Q1 Financial Year 26 recorded only 1.5 million, a significant slowdown in new user sign-ups. This is a key concern for future growth momentum. However, the client chart on the right illustrates that despite this slowdown in new acquisitions, Angel One's total client base continues to grow robustly, reaching 32.5 million in Q1 Financial Year 26. This indicates a strong client retention and engagement for their existing user base. Now let's talk about the core business. Trading volume shows sign of pressure. On the left, for the number of orders processed, we see a modest 4.8% quarter-on-quarter growth. However, the year-on-year figure reveals a significant 25.8% decline. Similarly, the chart on the right for average daily turnover or ADTO shows an 11.7% quarter-on-quarter increase, but a 18% year-on-year decline. These year-on-year contraction, particularly in high-margin segments like future and option, are a direct consequence of stricter regulatory changes. So amidst the challenges in core broking, Angel One's strategic diversification is proving to be a bright spot. On the left, their client funding book has reached an impressive 48 billion, making an all-time high. This indicates deepening client engagement and successful growth in their leading activities. On the right, wealth management assets under management or AUM shows explosive growth, increasing by 33.6% quarter-on-quarter to reach Rs 50.7 billion. This figure demonstrates that Angel One's effort to expand beyond traditional broking are bearing fruit and providing a crucial hedge against market volatility. Now let's discuss the main reason behind the poor performance of Angel One. The quarter's performance cannot be fully understood without acknowledging significant external factors. This flowchart illustrates the chain of events. The cause was stricter SEBI F&O regulations. The immediate effect was a sharp decline in F&O volumes, down approximately 38%. The impact of this was clear: significant pressure on Angel One's high-margin revenue streams, and the reaction from the market was swift and decisive. with the stock dropping over 5% and analysts issuing downgrades. In conclusion, Angel One's Q1 financial year 26 results presented a mixed and challenging picture. We saw a significant miss on total income and a moderate miss on net profit after tax, primarily driven by the impact of stricter F&O regulations. The core broking business faced considerable headwinds with year-on-year decline in trading volume. However, the company demonstrated resilience through strong growth in its non-broking segments such as client funding and wealth management (AUM), highlighting a successful diversification strategy. The market's negative reaction and analyst downgrade underscore the ongoing impact of regulatory changes. For investors, key watch point moving forward will be how Angel One navigates these regulatory challenges, continue to scale its non-broking revenue streams, and whether management's optimistic outlook for a business pickup by year-end materialize. Angel One's strategic pivot toward a broader suite of financial service will be crucial for long-term growth amidst this evolving market landscape. If you like the analysis, please like, comment your thoughts and subscribe my channel. Thank you and Jai Hind.